All right, well, welcome to another session with the Market Trader. I have a very special guest today, Clinton. Our guest today has a background in architecture and finance. He specializes in a number of instruments, but mainly, I would say, XAUUSD is one of his staple products. He has been trading markets for about 15 some odd years. I first met Clinton back during my days of November 2022. We worked together actually in sort of a market stalker method kind of capacity, where I was kind of supporting Clinton along in his adoption of that method. So without further ado, please join me in welcoming Clinton. Clinton, before we get started, if you can help me with your pronunciation of your last name, that would be excellent.
Excellent. Thanks, Ray. Pleasure to be here. The last name is pronounced Ratanatray. The best spelling for the name is like a rat on a tray. And she's always held me against that. So it's easier to remember.
I like that. Not that I want to associate you with a rat, but no, I like that nonetheless.
Too, so feel free.
Excellent. Well, Clinton, tell us a little bit. I mean, I know that, you've been in this space for some time. I've worked with you in the coaching. Tell us a bit more. I'm kind of interested in understanding your story. I know you come from a background, architecture and finance, not something that you would naturally associate as a natural extension one to the other. So tell us a little bit about how you got started, what I'm assuming you got the bug like everybody else has had in trading. So
the transition from architecture to finance and then into trading, I had a friend of mine, great guy. We used to work on Westfield, London together, and he pinged me the other day. I posted something on LinkedIn and just shared some of the results that we're achieving with Collide Capital in the Darwin-X space. And he said, how do you go from an architect to a trader? And you can't wait to hear the story. There is always synergies across someone's journey in life, whether that's in a career path or their personal life, whatever it is. I think that you can always join the dots. With architecture moving into finance, that was really around, I wanted to, in the architectural space at the time, I didn't see a way of actually making a lot of money quickly. I was young and I wanted to make money fast. So I had the opportunity presented to me to join a bank, and I chose to take that opportunity, and then I stayed with the bank for about 7 years.
Oh wow!
And so that was interesting. But during that time, I was also involved with tech companies, and more importantly, and associated with what we're talking about, I got involved with the markets. And I went to an event, I saw someone presenting a chart, and my mind just started whirling away, trying to understand what the space was.
Right.
Things started from there.
So I'm assuming that I guess, obviously the bank, right, allowed you to get some experience in a variety of instruments. And then that led you, if I read correctly, you had, I think when you first started with the market stalkers, were trading a boatload of a variety of instruments or forex pairs, I guess.
I had, so when I met Dee and started the mentorship with Dee, which is where we met, obviously, right? I was trading at the time about 40 pairs, and I remember Dee saying to me, okay, you need to choose 2. And I was sat there thinking, really? But I love the 40. I love them. I love what I'm looking at.
Yes.
But as I think, when you enter into a relationship with someone and you're trying to learn from that person, then my view is that it's important to take on board everything that person is trying to help you with, and just leave everything at the door.
Yeah, absolutely.
So I chose gold and oil. Actually, no, initially it was GBP USD. And I think it was Euro USD. And then it was summer months, and Dee said, look, it's getting a bit quiet. Why don't we have a look at gold? So that's kind of how it started.
Gotcha. And so you've been in, I guess, gold ever since, right?
Yes, gold is, I love it.
When I first started with Dee, well, I had already been trading for some time. and obviously maybe was getting sort of mixed results. I think my first mentor when I first started was John Hoagland. He's also a performance coach at Top Step, and I started off with him, and he kind of introduced me to market profile and things of that nature. But I was, he was having me trade the ES and the NQ, and I was having some success. If you look at my equity curve, it was very choppy. There's got to be a much more consistent way. I mean, I've gone from maybe relatively losing, right, to break even, which is part of any journey, right?
Absolutely. Yep.
But I felt that there was maybe something else out there, so I kind of branched out and found Dee. I don't know if it's some sort of, maybe I think I actually caught her in some sort of Udemy or Udacity kind of thing on market profile, because I was actually quite keen in understanding market profile at the time. Okay. Sure. I got to work with Dee a bit, and found that well, she immediately said, well, forget about you need to move on to something like crude oil and gold. Me personally would suggest that you trade crude oil. So that's kind of how I got started, and I found that the movements in these instruments, kind of fit my rhythm, if you know what I mean. I always comment about the fact that NQ is kind of the girlfriend that's not right for you, but you end up going back to her anyway, right? Right. Yeah. And so I found that crude oil resonated with my mindset far better. It moved more consistently. I got less gyrations, up and down in price, because I feel sometimes that NASDAQ just does not want to have any passengers, right? And so I just like to maybe have you comment along those kind of lines, and maybe how you arrived at eventually the two pairs that you had mentioned.
Every instrument moves differently, and you need to find the one, especially as discretionary traders. Obviously, if there's algos going on, then the systems will be looking after themselves. But as a discretionary trader, I think it's important to find the one that you do resonate with initially, and then work to hone the skills on that, and then optimize. And I guess that is what happened when I was working with Dee, and I found that gold and oil, especially with the market profile methods that Dee trades with and was teaching, it was fantastic, because the ability to have the high probability setups and know the probabilities behind those, which obviously Dee had done all the work on that, then meant that when they arrived, then you could expect that the movement in price, and that, I think, is as both of those being highly liquid instruments, provides the opportunity for that, whereas in some other instruments it may not exist.
Correct. Yeah. Now, there's a lot of, as you know, the statistics around the success around this space is quite small, right? There's only a small percentage, maybe probably in the single digits, right, of folks that are able to succeed in trading, right? What would you say are some of the things that maybe can get you closer to that group in your experience?
Yeah, I think it's all comes down to habits, making sure that you're doing the right things, because I think a lot of traders now, obviously we're talking about the retail space,
correct?
Primarily a commercial, let's say a bank trader working to then transition into a retail space is actually a very tricky thing to do, because the way that you approach both spaces is different. So I think from a retail perspective, it's important to make sure that we're doing the right things, because it's very easy as someone who's trying to understand and work out the space alone, if you like, to then just spend lots of time and energy on something, and you think you're doing the right things, but actually you're not, and you're just kind of spinning wheels and wasting time. It's all about habits.
As you know, I think you are also involved in this as well. We work with a number of traders, right? I know you have a mentoring business that we are we're going to touch on maybe a little bit later in the session. I've also kind of dabbled in the coaching space as well here of late, working at Top Step and also handling individual clients. What would you say are maybe the top 3 things that you are consistently working, or maybe are consistent themes in people that you work with?
I think the first is expectations. Clients that are at that break-even level are very, very interesting to work with, because they are in a position where they have already traded for a period of time. They already know they've built the skills to be able to execute trades. They have a strategy in place, or several strategies that they've traded, and they're in a position where their expectations are kind of in the right space, but may need a little bit of just shaping to help to understand what, at least in my mind, the reality of the markets are. So I think the first is that just kind of working with people to make sure that their expectations of the markets and themselves is on point. And then number 2, I think, would be, people have strategies that work, and they have either created those, or they have learnt those strategies from someone else. But it always comes back to the back testing that is done. It doesn't match to the live account. So that sort of disconnect is down to making sure that what you've actually done in the back testing is how you trade the markets. And you and I both know that emotional control and risk management and all that good stuff can get in the way. So I think that's probably the second thing to kind of work with. And then the third is just making sure that, again, the habits are embedded. So when I'm working with people, I like to basically say, okay, what are you doing on a daily, weekly basis? And I actually request that everyone uses some type of time management tool to track their day and to track their week. And just over a standard sort of, like whatever your standard week would be. Because once you've done that, then you're in a position where you look at what are you allocating time to? And that may be across, your exercise. Do you need to sleep better? Are you going out and drinking a little bit? And that impacts some things. We've all been there. So so I think it's having a look at the habits and making sure that you're again doing the right things.
Now, speaking of habits, that kind of leads me into a good discussion here, a good segue. One of the things that we talk to a lot about with traders is journaling, trade journals.
Absolutely.
And the importance of trade journals. When you speak to a trader, it says, I tried that for a period of time, but I really need to get back to it. Right. And again, it comes back to your comment about habits, right? In order to, comments I make to traders all the time is that if you want to be consistent, we need to do consistent things.
Exactly.
Right? How can you expect consistent results if you are inconsistently applying those to the market? Along the lines of trade journaling, taking and reconciling the trades that we've taken for the day and picking up some things that, because no one's perfect. You've been at this for 15 years. I've been at 10 to that. But so the idea here is that there's always things that we can, one, work on. Two, we sometimes fall prey to. Regress to some degree. And what I usually tell people is like, okay, well, let's take a look at your journal and let's look at a time when maybe you traded successfully. And what were some of the things that, that gap is not there in my journal. It's like, what do you mean? It's like, well, how do you fix yourself? How do we fix Trader Clinton, when he's in a drawdown?
Absolutely.
Right. So I'd like to get your thoughts on that aspect. And again, it kind of speaks to what you had mentioned already with respect to building good habits.
Definitely. I think journaling is one of the very first habits that has to be installed if it's not there already. And then also just checking what type of journaling people are actually doing. Now, it's, as with everything in life, I think that trading is a great space where you always have to work with what works for you. And journaling actually is one of the ways that you're able to establish what works for you. So for me, I was journaling before I met Dee, and before I was going through the mentorship with Dee and yourself, Ray. But I was not doing it in any way the same that I was doing it with Dee and yourself, and then post that. And it was very much the habits of doing it day in, day out. And that was every single day and every single week, and then a monthly review. And in addition to that, it was also obviously the scenarios that we were putting in place. So the weekly scenarios, and then the daily scenarios, so the pre-market prep. And those two habits became the journal. So, and I think with journaling, there is often people either do one or the other, or a combination. But often I see that either people are just capturing screenshots of trades and sort of putting on, here's a 1 to 2 hour, 3 hour, whatever it might be, risk rewards setup, or they're capturing the data in a spreadsheet. But it's rare that people are doing both of those actually at the same time, and keeping the journal in that way. So it's here is the quantitative data, and here is the actual charts, if we're using charts to make decisions. And then in addition to that, here are my emotions, and here is my scorecard for the day, etc. So it's that, and I'm saying, that's obviously people that I'm working with. So it's that combination of the two that then mean that we've got the actual data points to look back on, but then also the stuff that's going on in your day, and the mental and the emotional stuff, which the data points won't capture, but you can then reflect back into the results, the performance.
Now I think you bring up an excellent point here, and the fact that it's multi-dimensional.
Absolutely.
One does not work without the other. Having the words kind of outlining the trades is one thing, and maybe the setup that you use to arrive at that trade. But then having the visual of seeing the chart and seeing the words together in one location is very powerful, because you don't have to go back and dig through, maybe back in your platform, looking through and find that area. You have a reference point that you can go to, and they say all the time that a picture is 1,000 words, right? There's no amount of writing that you can do in the journal to capture that, the exact setup and what it looked like to you at the moment that you pulled the trigger.
Definitely.
And then the last aspect, and I think where I kind of focused a little bit, we were talking earlier when we first started, that's the aspect that I was kind of working on with you, was this emotional aspect, and how we control our emotions as we enter and manage and exit trades. Are we even keel throughout this process, or do we see ourselves kind of oscillating between fear and greed and what other emotion that we could be feeling? So I think it's excellent that that you bring up the fact that it is three dimensions. It is not just one dimension that needs to be taken care of here. So speaking along those kind of lines, and again, we're not necessarily, I'll freely mention some of the tools that I use, but what are some tools that you use in again, capturing these three elements? You mentioned spreadsheets and Word docs.
Absolutely.
But sometimes these things don't come together.
Yeah, and I think there's lots of tools that are out there that I'm clearly not going to be aware of everything that's there. And I think there's some very latest, up to date, say for instance, Trades Zeller. I've just sort of stuck with what works for me. And that is really capturing the information in a spreadsheet. So whether that's a Google Sheet or a Excel file. And also I use Miro. Miro, it allows you to put all your thoughts everywhere and then just bring that info onto the one page. So I love thinking like that. So I use Miro for loads of stuff. But specifically for that.
Now I would add probably to that list, and that's something I think Dee has also offered in the past, and I use today, is Edgewonk.
Yes.
Right? So Edgewonk is one of these other tools that allow you to do all of these things, to capture the emotional state, to capture the mechanics of the trade and the setups, and then also be able to attach a photo or a screenshot of the actual trade. If you put in the work to get the data in, it offers some very nice insights. It says, hey Ray, you should really reconsider trading Monday mornings or Friday afternoons or something along those lines, or or hey, this instrument doesn't really resonate with you on Fridays for whatever reason, you know,
Definitely.
right? So these kind of nuances and insights allow you to become more consistent, right? So that's kind of what we're all after. So what would be some things that you can offer to our listeners with respect to consistency? I know you had mentioned about habits and doing consistently habitual types of things to support your trading. You mentioned health and doing getting the right amount of sleep and eating correctly and things of that nature. Can you speak to this indicators?
Okay.
Interest in indicators that maybe somebody else might be using, maybe because of alludes to it as the shiny object, right? What is it that person is doing that I could maybe use?
We all, I think, have fallen prey to that shiny object syndrome, where you're in a position where you have a strategy, you're implementing that strategy, it works. But for whatever reason, you might have made a mistake, and then you search elsewhere for another indicator to put on your screen. I think that indicators are a great way, actually, to provide information on the markets that if you're not seeing it, it can show you exactly what you should be seeing. And there's someone that I'm working with at the moment who, when he first joined, I said to him, okay, so how long have you been trading? 5 years. Perfect. And after those 5 years, what have you established as your strategy, and how did you get there? And it was a range bound strategy, which was a false breakout, so a spring or up thrusts, if you like. And I said, awesome. Okay, so that's what you've spent 5 years of your life, and that's where you've found a groove. So let's work with that. And I have a back pocket proprietary strategy, which is all based on indicators. And I shared with him, okay, let's have a look at this one. And immediately he said, but you're talking about indicators. And there was this blocker where people have said indicators are no good, they're lagging, etc.
Correct.
There is a view that once you have defined an edge, and you know that edge is profitable and probable, then really the second part is to make sure that you've got a mechanical trading strategy. The indicators, I think, are useful almost as training wheels to allow us to then say, okay, it's saying right now, based on the concepts of the theory of the edge, that I need to participate. So I think indicators are good, but yeah, I don't use indicators myself. The indicators I have on my screen are all based on price levels, not actual, not like although I have Bollingers, but I don't use them for trading decisions. But I think that they can be useful.
Absolutely. Yeah. So one of the things that a phenomenon, I think I'm sure you run into this with some of your traders, is this goes hand in hand. Okay, so they say I knock it out of the park when I go into my demo account, but I can't make heads or tails when I go into my my normal account. Or hey, I just passed the combine and I hit my maximum daily limit. I don't have that combine anymore. What would you say to someone along those kind of lines who seems to have something, right? They seem to be able to trade in the right environment, but find themselves in these kind of, I don't know, for lack of a better term, traps. And are being maybe potentially sabotaging themselves in a way.
Well, I think you helped me with that, Ray, back in the day. It came back to the emotional state that I was in at the time. And the journaling was what established the problems there. And obviously the book that you recommended, Trading in the Zone. So, but I think when there's a discrepancy, when there's a gap between back testing and the edge, let's say the edge works, and not only does the edge work, but the trader has established for themselves that the edge works, because unless they believe in it and unless they're able to find that edge in the markets, then they're not able to trade it. So that's I think is always the first step. Can you be comfortable that there is an edge, and once you've done that, can you then say, okay, in the live markets I can see that? But then it comes down to often it's the emotional state, and it's the things that are playing in us which stop us from trading the edge.
Yeah.
And we all know it. And we all, you know, fear of loss, fear of missing out, fear of leaving money on the table. But being in the position where you're able to say, okay, I stuffed up there.
Yeah.
It was me who made the error. That's a transition which is so important. And I say it to my children. You know, I've got 3 kids. The oldest is turning 12 in just under a month. You know, I say to him that for me, one of my definitions of a man is when they take full accountability. Now, man, woman, whatever it be like, but full accountability. And the markets will demand that from you. If you do not take full accountability, forget about it.
Absolutely. Yeah. No, that's totally spot on. As traders, you know, we find ourselves, you know, seeking, I mean, we're all traders because we desire the benefits of trading.
Absolutely.
Right. And so we are kind of think that the market is kind of a drive-through, right? Where we can just place our order, and at the end of this, it just happens, right? We get the profit that we desire, but we find that it is not always that straightforward, as you and I both know. One of the things that I recently have done is I used to have, and I didn't realize this, and this kind of takes me back to a story when I first started. I thought I had I felt I was disciplined and whatnot. But I found myself gravitated looking at that number far more than I needed to, and less in maybe going through the various multi-time frames that necessary to see whether or not you are in a proper trade or not.
Sure.
That I found myself that I got myself to the point where I said, look, as part of my journal, see my profit go up or down. I took the initiative as figuring out a way, and then most of these platforms do it. And I just basically said, you know what? I'm going to turn off profits, and I'm going to make this a tick thing. I'm going to just track ticks.
Love it.
And that level of abstraction, okay, has allowed me to, I didn't really care about the tick. That natural step necessary to convert the ticks to an actual dollar amount was enough for me to not spend any time on it. It was something that I kind of played out today in a trade that I took in gold.
Right.
On a short trade. Had I spent time on the profits, I don't think I would have held that trade as long as I did, because the ticks really didn't mean anything to me. I know that it was a positive number, so I didn't multiply the number of ticks by the tick size to get my profit total. So I'd like to get maybe your thoughts on how you've maybe navigated that space, whether profits like that have impacted you in some sort of way, or if not, it's also kind of possible as well.
I had come across some information recently, and it was around daily targets. Okay. If you're obviously doing intraday and you're in a position where you've got a profit on, and you know that your daily target is X, if you take that profit, then you've hit your daily target. For me personally, that I was booking profits. Because I have the data in my so through DarwinX, I've got the ticker which has and the data which DarwinX collects is fantastic. It actually allows you also to see what you need to be working on. And one of the things that I need to be working on right now is my close strategy. So I'm working to implement ways that I have a more rule-based approach to actually closing trades, and more often than not, that's for booking profits rather than booking losses. The dollar amount for me, I'm okay to see it increase. I'm good at holding, but when the market moves against me, I can often hold longer than I should. So I need, so that's something which I'm sort of working on. One of the key things in my journal that is for me to not look at the charts. Going from intraday to swing is something that I want to do now, because my performance is looking higher on swing. Intraday is still great, but also just the ability to have a little bit more time back in your life. I have this tendency to always be wanting to know what's going on, and then you get seduced. This strategy works, and I can through my journaling. One of the key things is just put an alert on and leave. If
I find a good daily level or 4-hour level, something that is sustaining, maybe even a weekly level that price is coming off of, it is not uncommon for me to what I call set it and forget it.
Yep.
Right. You put the trade in, you put your stop loss, and you walk away. You come back 2 or 3 hours because you're basing your trading decision not on a 1 or 2 or 30-second chart. Right?
Exactly.
You're basing your decision on a weekly or daily level, something that, you know, it's not going to break any, at least not on the first, all levels break at some point.
Sure.
Right. But a weekly and a daily level carry a little bit of staying power. Right. And what better place to put a trade if you're at one of these extremes,
Sure,
around a weekly or daily level, and really the only thing that you're going to do watching it.
and so easy to do.
Absolutely. So often when I do find myself in those, and you know, they don't happen on a daily, we don't reach weekly levels on a daily basis. That's why they're called weeklies, right? But daily levels, they come about maybe at least once, maybe twice a week,
Sure
right?
thing. Absolutely.
Right. And so I find that those trades work out far better for myself because 1, I know that I'm at a strong level. 2, I'm not in front of the market. And potentially have, you know, some sort of mindset or some sort of, you know, price action affect me in some sort of adverse way.
Yeah.
So I'm kind of interested in understanding in some of these trading. She does talk about swing trading. I'd like to understand a little bit further how you evolved from, because when the coaching program, I believe you were doing some intraday, you know, you were intraday swing. I define myself as an intraday swing trader.
Like it.
I don't hold positions overnight. What I try to do is, you know, you want to hold a trade for an hour and a half to 2 hours, maybe the entire session. If you come into the right level, I find that traders are far too micro focused. They want to trade off a 30-second chart. I have a hard enough time looking at a 1 minute chart.
Sure.
Right. So I'm kind of curious in understanding your evolution from an intraday, and was it you know, something along the lines of maybe personality, you know, finding that maybe that the holding trades as a swing aligns with your personality much better than intraday.
So with D and yourself, Ray, it was all intraday trading. Obviously, D teaches swing as well, but I was focused on the intraday.
Yeah.
I think the great transition from intraday to swing for myself happening now. Literally as we speak, I've made a decision that, okay, let's stop the intraday. I've even shut any prop firm account that I've got on intraday. I've just closed it and forget about it. So the transition has been great because the habits that you learn for intraday are there every day. You have to rinse and repeat that same process every single day of the week. And that then builds the right approach to making sure that you do those processes. So now for me, they become more of a weekly process and then a daily process rather than a sort of a pre-market prep at New York session open, and then we're good to go. So I've enjoyed taking the intraday thinking and then applying that to a higher time frame where I'm able to participate in the markets. I'm able to say, okay, I've seen this before print multiple times on a intraday perspective, but it's showing the patterns, if you like, because the way that I view price is that it's always fractal. Every the models that I'm trading, they're always fractal. Right. So having then seen that play out so many times on an intraday basis means that when you see it print on a on an hourly as your trigger, or a 4 hourly or even a daily, for instance, or you see that same pattern print on a daily, you can say, okay, that is going to hold, or at least I can put risk on them. To recap, the processes and the methods for intraday were amazing to build in those habits. But then applying that now to a more of a swing method, I'm really enjoying. But I'll share another one, actually, which I think is important around what you've raised for the psychology. I have found that very rarely do I now get that feeling where you're fighting. The charts are in front of you, and that's when you're going to revenge trade. That's when you're going to break your accounts if it's at risk. And I very rarely have that now, because I love to have my stops really far away from price. I actually look at it as I'm just holding a position right now, and it's got X number of lots on it. So I've broken down simply for me the way that we make and lose money in the markets, it only comes down to two things, and that's irrespective of whatever strategies we're implementing as traders, and whether that's an algo or a person. And it's basically price movement and how much risk are we putting on, how much are we buying and selling, and how much does the price move. So I have found that that feeling pops up more when my stop is close to price. So that is for me a clear indication that, Clint, intraday you have to have a stop close to price,
right?
Whereas swing, she can be further away. So
Absolutely.
that's another sort of reason for it.
Yeah, absolutely. One of the things I tell people all the time, even in intraday trading, don't lose sight of the higher time frame when you trade. Even though you don't trade the 4 hour, you don't trade the daily, what is the 4 hour and the daily developing in? Is it aligned with the general direction of your trade? Because if you can get those two in alignment, you're in a much more powerful move in that particular instrument, right?
100%.
The same holds true, right? If you're trading, say, monthly, weekly, daily, right? Daily being your kind of potential signal bar. Well, you want to understand what the monthly is doing in that particular instrument, and the weekly is doing this. The same. So as you mentioned, the same concepts that we use in intraday trading come to fruition in our ability to do swing trading as well. We're just looking at different letters. I mean, MWD versus D4H and 30, right? Something along those lines, right? And if you want to go even further down, there is something for everyone, right? The question is what resonates with you as a person?
Sure.
Right? There are some people that just thrive in chaos.
Yeah.
Right. 30-second charts, 1-second charts, I don't know. And others like yourself have found that the quality of life is obviously much better now that you said 3 kids now.
Yes, 3 kids now.
And what's your youngest?
4.
I'm sure the 4-year-old that probably is demanding a little bit more of your time. The 12-year-old, the 12-year-old is probably telling you to buzz off at some point.
He is.
I know I get that on occasion as well. So it's amazing how much of this is a personal journey.
Yeah.
Right. And understanding ourselves, right? The vehicle in which we understand ourselves is through the charts. The way we interact with the charts is really a reflection of ourselves.
Definitely. And as you say, it's only if we allow it to show it to ourselves.
Correct. Excellent. Thanks again, Clinton. I wanted to maybe spend the last, a couple minutes here and have you maybe kind of touch on some things that you are kind of continuing to focus on. I know you had touched on this a little bit already, that you're kind of moving away from intraday to swing.
Yep.
What are some of the things that I guess keeps Clinton up at night, and focused?
Yeah, good question. The keeping me up at night is consistent improvement. So I think the Kaizen approach is something that I'm always bringing to the table. And whatever I have on the pads that I've determined as the next thing that needs to be tweaked for improvement is what's keeping me up at night. And right now the focus for me is I've been trading now 12 months in DarwinX for one particular ticker, ICBO, and we've achieved, I think, across that time about, where is it now? Around about 27% overall. And a Sharp of 2.8 roughly. So that's well within the range of the targets for that 12-month period. It was a 20 to 30% range with a Sharp above 2. So we're bang on in the center of that. And my focus now is to maintain that, but improve that for the next 12 months. So I'm looking to increase the 20 baseline to 30%. So I'd like to target 30% and above with a Sharp above 2. And that's my focus, and to grow the assets under management in DarwinX to £1 million. That's what I'm working to achieve. Excellent. And that's the main driver right now. The mentorships have come about organically through I had an opportunity to do a podcast with DarwinX and took that, and it was great. And then on the back of that, I had some queries around, are there any mentorships that you provide? So that sort of come through that. I'm really enjoying working with people. It helps me to help people, and it also helps me to get clear as to the thoughts in my head. And as you've said as well, Ray, just accountability for ourselves. So I think that's another thing that I'm focusing on is I've recently set up a YouTube channel, and I'm providing daily and weekly analysis just for gold. So just XAU over USD as how I'm looking at the charts and what I'm expecting to see. And a lot of that is for accountability. I do it anyway, but the approach of just putting it up and sharing it with the world. Absolutely.
So tell our audience if again the mentorship program, and if they wanted to kind of to work with you, and what would be the best way to reach out to you to organize maybe a talk or submit a contact or whatever.
Yeah, thanks, Ray.
What's the best way to reach you?
Best way to get me is if you go to kalaya.capital. So that's you can share the details, Ray, perhaps. But the website will provide a link in the top right corner for people who are interested to apply. And all they need to do is put in the information, and then we'll get back to you. But please include a phone number, because sometimes the emails land in spam when I send them out.
Right.
I also have a Linktree address, which has everything on there for people to connect with me.
Yeah, we'll definitely summarize that at as part of the kind of the close of the session here.
Yeah,
we'll provide all that contact information. But I wanted to thank you again, Clinton, for taking time away from your busy schedule and talking to us, and also, I mean, more importantly, I think helping traders, navigate the markets and the importance of journaling and establishing good habits and things of this nature. These are the foundational items that make us and grow us to become the traders that we all desire to be. So I want to thank you for that, and thank you again for taking the time to meet with me today. So
pleasure, Ray. Thank you so much.